Hello traders, today is the 31st of July 2011, and happy trading to you all, happy weekend to you all. Okay, we are looking at the monthly chart of the pound dollar currency pair, the GBP USD currency pair, okay, on the monthly chart. Okay, for those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For every trade, we will use the 5% money management rules and also apply stop loss in all trades. We will remember to draw the trend lines, okay, very important, the key levels, okay, and also the channels and the media line, very important. Okay, we are using indicators, but we must pay attention to the price, okay, the number one indicator. So looking at the price first, okay, before looking at the indicators. Okay, the price is the number one indicator. We have here what we call the bullish bat pattern, okay, for the pound dollar currency pair. The first condition for the bullish bat pattern, okay, is a downtrend. There are two types of bat pattern: a bearish bat pattern and also a bullish bat pattern. The bat pattern is what we call a Fibonacci pattern. Okay, so here we are dealing with a bullish bat pattern. The first condition for the bullish bat pattern is a downtrend. We want to see a downtrend. Can you see a downtrend? There was a downtrend from 0 to A. And then we want to see a contra trend or contra trend into the zone of 38% Fibonacci retracement level or 50% Fibonacci retracement level. Okay? So if we draw the Fibonacci levels here, you can see here, from here the price went down to 0, from 0 to A. The price retraced in a zone of 38.2%. This is not a level, this is a zone. As you can see, the price went above it to retest, okay, the zone above that 3 to 8% level. Okay, so we are talking about the zone. The price very often will go above that level, okay, to retest whether there are some sellers there. Okay, you see, the price does not stop at a level. Sometimes you may see it on the dot, the price will stop on it, but very often the price will go above it. So we are talking about a retracement, a contra-trend retracement in the zone of 38.2 or 50% to qualify for the bullish bat pattern. Very important. Okay, I'm going to remove that. Then the next criteria. So the downtrend first, and then a retracement to 38.2 or 50%. Okay, so we have two criteria being verified so far. The third criterion, okay, we will use again a Fibonacci 2 for the movement from here, uptrend from here to here. We want to see how much retracement the price went down. Okay, this B to C in relation to AB. So we want the B to C to be either 38.2 or 88% Fibonacci retracement level. 38.2 or 88% Fibonacci retracement level. Here you can see that the price dipped below the 78%. Try to come near the 88%. It's the 88% zone, but it couldn't touch the 88% level. But it was in the zone of 88%. You see now? So we are talking about zone. Nothing is perfect or exact or in this messy market. As you can see, we are more into, okay, the reality of trading, not about the theory or about the science. We are dealing with trading. How can you make a real money during a real opening time of the market? Okay, there are a lot of excellent books written, excellent website, full of excellent theory. Okay, but we are now concerned about the reality of trading. Okay, how can you make money trading? Okay, difference. So try put into the zone. Okay, so the second criteria has been verified: retracement to 38% or 88%, in this case in the zone of 88%. The third criteria for the bullish bat pattern is verified. You can perfectly watch other video on YouTube regarding the bullish bat pattern on Google. search for bullish bar pattern. Okay, we have already posted a video on www.youtube.com/George Trio, our channel, regarding the bearish bar pattern. So if you have not watched that video regarding the bearish bar pattern, you can go and watch it. So this one is about the bullish bar pattern. Okay, so the third criteria is verified. Okay, when the third criteria is verified, I'll go through it again: a downtrend first, and then a retracement to the 38.2 or 50%, and then again this one retracement BC in relation to AB to the zone of 38% or 88%. If we see those are three criteria, very important, okay, then we will set our target in a zone of 88% Fibonacci retracement level in relation to 0 to 8. Okay, I'm going to remove my last line. Okay, if you are an experienced trader and you think that I'm speaking very slowly, forgive me, I'm doing this on purpose for new traders. Okay. Alright, so we're going to use again the Fibonacci tool to draw the line here. Okay, so my apology for the noise. So we have the three criteria being verified. So we have a bullish bar pattern in place. We want to set the target. So if the bullish momentum, okay, continues, so we have a bullish bar pattern, which is a technical, okay, information. We will pay attention, of course, to the fundamentals. Okay, very important. Okay, applying the trading triangle. Okay, I'm going to say again: trading triangle, the market first, the sector, and the individual financial instrument. The heart of the trading triangle, we have the market leaders: Google, Apple, okay, ExxonMobil, Caterpillars. Okay, these are market leaders, and also we pay attention to the market indicator, which are gold, okay, and crude oil, so to speak. Okay, and we pay attention to the news, of course, going to Google Finance. For those of you who are using Android software in your tablet or on your mobile, you can perfectly download Google Finance. News coming in constantly, you can flip through them and know what's happening. Okay, very important. This is what the professionals are doing. They are watching the news constantly. You can also go to www.stochastic-market.com. Click on the economic calendar. Don't just look at it. Try to understand what's going on. How many news you see. Check for the red envelopes regarding the forestfactory.com. Okay, the red envelope are high impact news, very important. Okay, know when and what time, okay, this thing is going to be released, and do not play your games around those times, okay, so to speak. Alright, so steadily, if you are a new trader, you think that is too much for you, take it one step at a time. Okay, slowly, no rush. Okay, patience. Okay, breathe in and breathe out. Okay, the frustration will come, but you take time and practice. Okay, the time and the practice will assist you. Okay, the willingness to do better today than yesterday, that's our goal. Okay, so our target, okay, enough of my blah blah blah, is here. Okay, color in my favorite color, yellow, in this particular case. This is our target. So when we see a bullish bar pattern is completed, is in place, we will set our target at 88% Fibonacci retracement level of the distance from 0 to 8. So our target is telling us that if the bullish, repeat, if the bullish momentum continues, the price has a high chance or a high probability to reach the target zone of 2024. You can see 2027. I prefer to call it 2024. Okay, this is our target zone. This is our greatest target zone. But as always, like I told traders before, the knot must be broken. It's the knot here. Okay, you can see also for the bullish bar pattern that there is here, as I'm speaking to you now, a higher low. Okay, higher low, see here, and a higher low for this double bottom pattern. Okay, it's a double bottom pattern with a higher low with the criteria of the bat pattern. But the knot must be broken before we declare this downtrend kaput. Okay, all right. So it's not yet broken yet. Okay, so we are still, okay, even though we have a bullish bad pattern, we are still under the pressure of the bear because we didn't cross the border, so to speak, the border of the bearish country, so to speak. So we must cross this border. So we are expecting in normal condition, very important, okay, for the price, okay, my apology for the noise, to do something like this, break above it, okay, and then retest it in normal condition before continuing the movement to the target zone in normal condition. Attention on the fundamental. If the UK economy is not doing well, okay, if there are a lot of bad news regarding the UK economy, okay, the United Kingdom, Great Britain, okay, you will see all the blah 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 about bullish turn into bearish, which means price finding a resistance here and just come to the other way. That's why we say follow the price. Do not assume anything or force your homework on the price. Use the TSCW24, TSCWSY08, TSCWSY008 like professional trader in order to cream the market consistently, keeping your eyes on the price itself, the number one indicator. So we have here a bullish bad pattern, no question about that. So the target for the bullish bad pattern is 88% of the movement from 0 to 8, somewhere here. It will take some time, and the fundamental and the market must support this movement before we can reach this target. But the good news about this pattern is that sometimes you will see the price going down, going down, going down, going down because of the fundamental and all the market sentiment, the blah 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 blah. But finally, steadily but slowly, the price at one point in time will reach this target here. So do not forget this level. Okay, you may see all the blah blah, the price crash back down to retest this trend line, do all the blah blah blah, and one day you see the price here and you say, oh, Josh said this before. So keep your eyes on the price. The knot must be broken, break it, retest it. What do you need to do? Follow the price and use your tool like professional trader. Going to the weekly chart, what do we see on the weekly chart? I'll remove my lines here. Okay, going to the weekly chart for the pound dollar currency pair, we see a trend, we see a channel. Okay, I'm going to draw a common sense trend line like this, a common sense trend line. Okay, why am I saying common sense? Because some will say it should be like this, somebody may say it should be like this, another person may say it should be like this. Okay, so that's why I'm talking about a common sense trend line. Okay, I will leave my common sense trend line on the chart and draw a channel like this, a line that I'm drawing here parallel to the previous one. Okay, the price is in a kind of a rising channel. If you draw your median line, something like this, the price is in a rising channel. See how you're touching the median line, touching here. Now we are here. Okay, if you draw below it, we will project the previous channel to the other side. Projection, projection, projection. Simple. Keep it very simple. Don't look for some miracle. Okay, the miracle is right here. Okay, don't ask for new miracle. It's right here. Okay, draw your line. The higher time frame commands the lower time frame. So we move from the monthly chart to the weekly chart. Now we're going to the daily chart. What do we see on the daily chart? I will remove again all my lines. On the daily chart, we see a kind of consolidation taking place here. Can you see that? Okay. Okay. Market pattern, trend, pause, trend. The market will trend, the market will pause. The market does not always trend. Traders coming into the market every day expecting the price to move. It doesn't move all the time. Sometimes you move, sometimes you may not. Slowly. Okay. Here you see what the price was doing all this day. Okay. It was just bumping between these two levels. Okay. Up, down, down, up, down. You see? If you look at the S&P 500 or the Euro USD, was similar scenario, up and down, up and down. Okay, if the market is waiting for some important news, you will see a lot of up and down. Okay, up and down, up and down. Okay, because it's like the market sentiment is not ready to push it to the next level. So just go up and down, up and down, up and down. So you see now on the weekly chart there is also, you can notice that there is a consolidation. You see here, okay, these two lines I've drawn on the daily chart still valid on the weekly chart. You see, okay. So this is it regarding the pound-dollar currency pair. As I said to you before, we are not trading only the technical. We are trading the fundamental plus the technical using our tools, which is the market triangle. If you are trading any of our trading system and you forget about the market triangle, we posted a video on YouTube, www.youtube.com/Trio. You will see the triangle always applies. The market, the market, the sector, the individual financial instrument, the heart of the trading triangle. Fundamental news. And market leaders, very important. So do not assume anything, but follow the price, the number one indicator. This is regarding the pound-dollar currency pair. A bullish bad pattern is information right here. We will keep our eyes wide open, paying attention to the fundamentals, the news, and the price, the number one indicator. I hope you enjoyed this video also regarding the bullish bad pattern that you will put into use in order to cream the market consistently. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders.